Good afternoon, everyone. This is Rich Swerbinsky with the Mortgage Collaborative here once again with the last week in mortgage today, our weekly walk through all the latest news and happenings in the mortgage industry. Each week, I am pleased to be joined by one of our lender members as my co-host. And this week, one of our first members, earliest members ever, the SVP and Director of Mortgage Banking at First Bank, Rob Henger. Rob, good to see you as always, brother.
Good to see you, Rich.
And I genuinely mean that. The people that believed in TMC when it was a little bit more than, hopes and dreams. I really appreciate it. I remember us talking in the early days and, me laying out what we were looking to do at TMC. And you said, no one got to say another word. I believe in what you're doing and we're in for it. So I really appreciate that.
You guys do a great job. We learned a ton. It's a wonderful, it's a great resource. It's helped me a ton in my career. So thank you.
Awesome. And birthday today, I see in the chat from one of our staff members. So happy birthday.
Yes, getting old, 54 now.
Oh, man. Cool. Well, let's get right into it. And before we do so, though, I always like to have our co-host level set for the audience. Tell us a little bit about First Bank, Rob, and the mortgage banking operation within it.
So First Bank, we're based out of Nashville, publicly traded. Been about 5 years now, I think. Yeah, about 5-6 years. We just crossed the wonderful threshold of 10 billion. So the nice folks from the CFPB are about to spend some time with me on a full-time basis. And our bank, retail bank, operates predominantly in Tennessee, a little bit of Alabama, a little bit of Kentucky, a little bit of Georgia. Our retail channels, we have two fundamental mortgage channels, right? The traditional retail footprint is going to be pretty much the whole state of Alabama, Tennessee, a little bit of Georgia, a little bit of Kentucky. And we operate a little bit more like an IMB than a more of a bank centric mortgage operation. I think if you look at the Strathmore peer group, we show up in the hybrids, right? So we look and operate more like an LPO shop than we do a bank. That's on our retail side. And then we have a pretty robust consumer direct division based out of Charlotte, North Carolina. And to avoid channel conflict, they pretty much operate nationwide except Alabama, Tennessee, and Georgia. And we operate under the trade name of Consumer Direct. And both lines of business run pretty autonomous. And collectively, let's see, we did about 7 billion last year. So that's about where we are from a size standpoint.
Awesome. Thanks for running through that, Rob. And yeah, we have, a few members, like you guys that are banks, but really operate more like independents. Really a great model. You guys do the consumer direct thing as well. So really interesting mortgage banking operation First Bank has, and it's been great to see it grow under your leadership, and all the best to you guys as we move forward. So let's get into the news, Rob, and let's start with the Federal Reserve meeting. Commenced today, 2-day meeting of the Fed. They'll come out and release their statement tomorrow, and widely expected that they'll formally announce the beginning of their taper of bond purchases, about 120 billion a month it's been, and a big chunk of that being mortgage-backed securities, and likely lay the groundwork for some rate hikes as we get into 2022. You expecting anything different than that when the Fed speaks tomorrow?
Expecting or wishing? Those are two different things, right? So I would say expecting difference, no. I mean, we're mortgage bankers. Anybody who's been doing this for a long time knows, we got to roll up our sleeves, and we have good times, we have bad times. And we've just come through some good times. We're going to work real hard and get through the bad times. Or not bad times, but it's going to be more challenging in 2022 than it was 2021 and 2020.
And we've seen rates creep up a little bit kind of into this Fed meeting and the announcement and expected taper news tomorrow. How has that impacted? I know refis have been really rate sensitive, throughout the summer and early fall, but has that slight tick up in rates affected purchase business? How's that been for you guys?
So, as expected, right? When when the feasibility of a refinance starts to wane, then people pull back. So obviously our percentage mix of purchase versus refi is slanting obviously more towards purchase. The one unique thing, and it's probably not, I say unique, it may may feel that way, but in some of our markets, Nashville, Huntsville, we've got a high growth going on in those markets. And it's, when you talk about being a seller's market, that's an understatement. We're seeing multiple bids. We're seeing 10% over list price, 20% over list price. So when you have a housing shortage, I'm not sure if interest rates are going to really impact it a whole heck of a lot. So I'm going to be optimistic. I'm going to be bullish that a rate increase is not going to have a negative impact on the purchase side of our industry.
And just in general, we had pending home sales that came out late last week, and it was down a little bit. I think it was up. It was up way more than expected in August, pending home sales, and then was unexpectedly down more than expected in September. But I think that's just been really emblematic of the purchase market in general this year. It's been not bad at all. I mean, historically, it's been pretty good, but there's been no really rhyme or reason to it. You didn't get the traditional spring buying season. The year started out hot with a lot of refis in Jan and Feb that a lot of us weren't fully expecting. And the purchase market's is like consistent but uneven, a good way to characterize here in 21.
I'd say this for what it's worth. You and I both been at this. I'm 30 years. It's hard to believe. I've never seen a pandemic in that 30 years, except recently. So most things in the mortgage business just come back in cycles every 5 or 10 years, right? You see the same problems, you see the same issues, and what you did 5 years ago that didn't work, you don't do again. As you look at the real estate market today in the paradigm of the pandemic, who the heck knows? Do you have pent up demand? Do we have a little bit of a housing transition, people leaving certain cities and moving to vacation areas? Do we have the blue flight, situation? There's a lot of variables at play in housing, and I am not a gambler by nature, but I would not gamble on what the heck the housing market is going to do. It's just too volatile, and all you can do is just be positive and work hard for the best.
See the road in front of you, because you never know what's around the corner in the mortgage industry, and rarely does it play out how we're anticipating or prognosticating in the months leading in. So, but it is going to be fascinating, because you're right. We've never seen anything like a pandemic, obviously, in this country, and its impact on housing, how that plays out when we get a few years down the road here. It's going to be fascinating. We've heard, anecdotal talk about population shifts. Your company's headquartered in Nashville. A lot of people moving there. We've heard anecdotally that, hey, this run up in housing prices, maybe it's a little artificial, but maybe the pandemic created more value to homes because people were in them for so long, and it added to the value of homes. It's going to be really fascinating to see what shakes out when the dust settles.
Agreed. And the other piece that, it's an unfortunate subject, but I guess the term is housing equity, right? The percentage of home ownership in the white population versus percentage of home ownership in Black population has reached a 60-year gap, 60-year high at roughly, 30%? Yeah, about a 30% housing gap. And I hate that the last 18 months has made that worse rather than better. I don't know what you do with it other than you work hard and you as Sandra Thompson and Rohit, pronounces the last name. Pronouncing his name's hard. Rohit Chopra. Their mission to narrow that gap, I think, is important, and that's something that obviously is a hot topic in our world.
Yeah, and I saw the MBA recently put together an affordable housing council that's got a lot of great mortgage bankers on it. It's certainly an important topic, and new CFPB director Chopra made his first comments to Congress, and he clearly addressed the gap, and his particular concern with black box underwriting algorithms, and his belief that like delinquency, and we've had bad times and bad performance of mortgage loans, it's not really tied to credit score as much as it is employment and other factors and income. So I think you're going to see likely a very fundamental shift in how we underwrite mortgage loans in America, starting with Fannie and Freddie as the leaders under the leadership of the new FHFA. No?
I agree, and I wish I could bring something meaningful that would be an improvement, but I applaud their leadership, right? Good leaders can paint vision, can paint an image, and today, if you're asking the industry to figure out how to hack your way through the jungle, you don't give machete and say just start moving, right? You've got to paint that start line and that finish line, and then you let people innovate and create and figure out how to do it. But good leaders state a problem, state a vision. You may or may not agree with it, but it is the right thing to do, and then you let people figure out how to do it. So I don't know how we're going to do it, but I enjoy it. I enjoy that. I'm proud of what I do for a living. I think everybody in the mortgage business should be proud of what they do for a living, and we just got to figure out how to create housing equity in our country.
Yeah, and I think to do that, you get like anything in life, you got to evolve. We were talking about football before we went live, and if it's offense in football looks a lot different than it did 10 or 20 or 30 years ago. The customer experience originating a mortgage looks a lot different than it did certainly 10 years ago, even as much as 5 years ago. And I think that's really what this new housing leadership group is really trying to do in a lot of ways, is really innovate and evolve the way we look at credit, what is likely to make people good homeowners, and what is likely to open in a responsible way opportunities for more potential home buyers that wasn't there in the past. And it's going to be fun and interesting to see it play out.
Agreed. And for the record, for everybody's benefit, so I grew up in Pittsburgh, and Rich is outside of Cleveland, and the Steelers beat the Browns this weekend, despite the fact that the Browns knocked out the kicker. Oh, actually, literally almost cold, right? But anyways, it was a fun game for me to watch. Probably not so much for Rich. Sorry to rub that in there a little bit, Rich.
Yeah, and if it got even worse today, Odell Beckham's dad posting on Instagram like shots of Beckham open and Baker not throwing him the ball. It's creating all kinds of headlines. So the week just keeps getting worse for Browns fans.
Well, you guys got a good football team, good city. So wish you the best. Back to the subject matter at hand. So think about it. At the end of the day, housing creates wealth, right? And it is an unfortunate situation that you don't have equality in the opportunity to create wealth. So however our industry figures that out, it's important. I've seen some test markets or some ideas on shared equity, which is really complex subject, way too complex for here. But if you have some time, Google that. It's a pretty interesting concept. There's some test cases going on in Nashville right now on projects like that. Cash flow underwriting. Do you move the DTI to after tax versus pre-tax? Does that help? Does it hurt? What states are going to have high tax? I'm in Tennessee, and we don't have a state income tax. Other states have high tax. Should the DTI be the same? Based on where you live. I don't know, and but it's going to be fun figuring it out for the next couple of years.
This is the last week in mortgage today. I'm Rich Swerbinsky with the Mortgage Collaborative, joined this week by First Bank's SVP and Director of Mortgage Banking, Rob Henger. And any comments, questions anybody has for Rob or I, please feel free to drop them in the chat with the Q&A, and we will incorporate them into the show. And Rob, right along the lines of what you were just talking about there, new ideas and new things we could see. I think the deadline for Fannie and Freddie to submit plans for 2022 to FHFA is coming up here towards the end of the year, and Fannie and Freddie expected to have higher goals and higher accountability to not meeting those goals from FHFA on lending in low to moderate income census tracts and lending to minority borrowers, and some of the things that have been rumored, or some of the things you mentioned, potentially changes or eliminations to the loan level price adjustments or delivery fees that lenders pay to Fannie and Freddie based on 670 FICO score and 95 LTV. this hit and makes it more expensive, and incorporating different things into underwriting, if it's the rental payment thing that we've seen already, and some other ideas. And what it reminds me of is, we've both been, I'm not anymore, but was a bank lender for a long time. Like the way you underwrite loans for your portfolio, right? A lot different than the Fannie Freddie, like this is the box, and if it doesn't fit, then it has to go somewhere else. But maybe a move towards more kind of common sense lending in a lot of ways.
Well, and if you think about that, when you say common sense lending and you put a human involved, you can almost throw out the common sense, and you can throw out, I mean, there is going to be some disparate impact. So the comment that Chopra made about the black box being problematic, I get it. Again, good leadership. He's doing what he needs to do, but figuring that out is going to be a challenge. I personally wouldn't want to go back to a world where we're manually underwriting. Now, does the Department of Justice, does the OCC, does the FDIC use the resources they have to strongly encourage lenders to do the right thing for the right reason and the right, in the right time? Absolutely. And I think awareness brings a lot to the table. Just being conscious of the effort to create equality is going to be the first thing. Now, the details, if they get rid of the LLPAs, I'm not sure that's going to have an impact on housing gap, but it'll be, we're mortgage bankers. We like change. It's fun. We'll figure it out.
One of the things I think we're seeing, though, from this administration is more telegraphing of what's coming down the road. If it's some of the statements we've heard from CFPB just related to fair lending and fair lending issues, or some of the things that we've heard from Sandra Thompson related to changes you are potentially or likely to see from Fannie and Freddie, as opposed to the last administration was, trying to lessen government's footprint in mortgage lending, and oftentimes with little to no warning with that. But which is good, because lenders have always said, like in this industry especially, we're dealt a lot of hands of poker, and it's just tell me the rules and what I need to do, and we'll shift and react and manage accordingly. And I think you're starting to see that now with lenders that are trying to, we had an enforcement action that came out against a bank nationally on redlining. News that just broke today, the state of New York is going to impose CRA requirements on non-banks. So you're starting to see some of the first shoes drop on what is definitely going to be a heightened compliance environment going forward here.
No doubt. You're treading on some interesting topics. I'll see if I can't unpack a little bit what I know. And let me first off say, the financial institution we're talking about is Trustmark. It's a great bank. They're a competitive bank. I've got friends that work there. They're good people. The consent order was over a period of time in 2014 to 2018. So I want to do them the kindness to say this is stuff that's in the past. But for those of you that are bankers, I think the piece that you got to be just really acutely aware of is this was a combined effort from the Department of Justice and OCC and FDIC, which is a little different, right? Because it feels a little bit like, if you remember the False Claims Act, at the heels of the mortgage meltdown, right? So you had the Department of Justice come in and judge, jury, and executioner, so to speak, and you saw large organizations that got hit with big fines. So it's kind of a shortcut through the process. So I think the Department of Justice being involved sends a signal. And just if again, if you want to unpack what, why, where, there's a $5 million fine and another restitutions and investments in local communities in Memphis for Trustmark. And what you want to take away from this is, as you think about your business, you think about your responsibility, a couple of things that are important. Okay. One, if you have retail bank footprints, regardless of where you are, be careful that you don't unintentionally avoid something. If a bank footprint or an LPO is in a majority census tract, then and you don't assign loan officers to it, then kind of by default, by not doing something, that's disparate impact, right? At the end of the day, you can find yourself in a redlining case. So you can't be the see no evil, hear no evil, speak no evil. You've got to be acutely aware of where your retail bank stores are and having loan officers assigned to them, whether they're Black loan officers, Hispanic loan officers, white loan officers. Those are decisions you have to make, but you do have to be aggressive about it. The other piece that I think is real important for the banking folks here on this call, is invest the time and energy in regular regression analysis. Do every week, do I like to sit down and go through numbers of, what are our APRs and run that across all the GMI data and review it. And I mean, it's not fun, right? I mean, fun is growing, fun is helping people. That's not fun, but you have to do it. You have to demonstrate the due diligence and the persistence to do the right thing. So I think that's, again, for all of us as bank lenders, just take note. You want to work hard so that you're not in a situation where your bank is in trouble. As it relates to the CRA work in New York, I was an IMB the majority of my career, and I used to feel sorry for my banking peers, that had to navigate CRA credits and requirements. And I will say this: there's a difference between CRA efforts and fair lending efforts. And as a white banker, it's hard to, it's not easy that you're treading on, on how to say things correct, right? And it'll be interesting to see if the state of New York and others use the CRA Act as the catalyst to promote minority homeownership, or is it truly, it's not reinvesting your assets in the communities, because if you're a mortgage lender, you're not taking deposits. So it's an interesting discussion. I'm not sure how it's going to play out. Rich, I should know this. Are there any other states that have gone there, or is New York first?
This is the first one. It's an interesting precedent because, as the Community Reinvestment Act, it is related to institutions that take in deposits and their obligation to invest, to lend out a portion of that money in the communities that they have FDI insurance that helps them bring in deposits on, which makes sense. And that act is held up pretty well throughout the course of time. But this is something different. And as you know, there's a difference between fair lending and CRA, but now you have a precedent that's been set in New York. I know MBA is still fighting it, and it's going to be in the news headlines probably for the next several months. But it's going to be really interesting to see how that plays out. And something else that's interesting to me, I'd love your opinion on, is just CRA in general, or fair lending in general. CRA is tied largely to like where your brick and mortar offices are, right? And all banks at different levels are, going away to some degree from bricks and mortar and generating more deposits online. It's going to be interesting to see how the Community Reinvestment Act holds up as that change continues to happen, which is going to continue to happen as we move forward, right?
Well, so to your point, right? So if you're a IMB in New York, what is your assessment area? Because that's what is measured in my world, right? It's an assessment area. My assessment area is where my bank puts its flagship. Where we lend money, where we earn revenue, we earn interest income, net interest margin by lending in that community, and we take deposits in that community, right? So that's a pretty easy definable geo-targeting. I don't know how you're gonna do it as an IMB. And again, I'll go back to my comments earlier. Good leadership doesn't always give you the direct path. If in my opinion, the leadership in the state of New York, they're doing the right thing. At the end of the day, if the end goal is to try to narrow the gap of housing disparity between minorities and non-minorities, then they're doing the right thing. Now, hopefully, the MBA, the industry, the regulators will come together and find a solution that everybody can agree upon to get to that end goal.
This is the last week in mortgage today. I'm Rich Werbinski with the Mortgage Collaborative, and I have about 3-4 minutes left with First Bank's SVP, Director of Mortgage Banking, Rob Henger. And it's going to be fascinating to see how this all plays out, because I think FHFA and CFPB and all the new housing leadership, they are trying desperately to do something that needs done in this country, and that is to narrow the home ownership gap between whites and non-whites. And it is too great, and it's just, it needs new ideas and fresh ideas to fix the issue. At the same time, in the history of America, every time home ownership has gone, I figure it's like 71 or 72%, like just chaos ensues every time. It's almost like, the natural regulator on things saying that home ownership is a great thing, and we have to narrow the home ownership gap between whites and non-whites. But at the same time, we don't want to make things so Wild West where 82% of all Americans own a home, because we know that always leads to bad things.
Yeah. Well, you and I've been at this long enough that we lived through that theory of everybody deserves a home. I would love, everybody deserves the dream of home ownership. Everybody should have the opportunity to do it. Not everybody should. And when we step over that line and we did it in 2003 to 2006, we did it, right? We stepped over and we said, hey, and it really wasn't even for the dream of home ownership. It was really for to flip and wealth creation quick, right? Get in, buy a house, you can't afford it, you fix it up, you sell it, you make money. That's what we got to be afraid of. If we continue the work towards long-term sustainable home ownership for everybody, man, I'm a fan, and I will roll up my sleeves and I'll do everything for it. If we start slipping back into a world where everybody becomes a real estate investor, everybody becomes a speculator, I think we start sliding towards a dangerous place. And that's the piece that we gotta, as part of our responsibility in this industry, is just not to get back to that day. Let's keep responsible homeownership in this world.
Anything else, Rob? You top of mind things as we head into a new year? It's been a good year for the industry. Again, way better than anybody thought. Industry looks like this is going to be probably the second best year in the history of mortgage lending, behind last year. And it was expected to be down 30-40% if you go back a year ago, and we were trying to prognosticate what 2021 would bring. And now, as we head into a new calendar year, 2022, you're seeing the projections come out again. Most people are projecting volume's going to be down between 25 and 40%. Refis are going to be cut over in half. Purchase is still going to be a little uneven. How do you look at the broader market as we move into a new calendar year here?
The guy that runs our consumer direct division has a great saying, and he says, you can't drive a car by looking in the rearview mirror. You got to look out the windshield. Now, the rearview mirror is here to help you, right? But you got to look out the windshield. So yes, 2020 was a great year. 2021 was a great year. We're a publicly traded bank. We live quarter to quarter. So what revenue what retained earnings we put in the world, they're gone. They're retained earnings. That's just shareholder equity. So my job is to navigate us forward. And I think that comes with the responsibility of growing and we want to grow responsible. You want to keep your culture positive. You want to keep your organization positive. And yes, there's going to be headwinds against us. But if you spend your day talking about those headwinds, it can what's a self-fulfilling prophecy. I don't want to do it. I'm going to work like a dog. Our folks are going to work like a dog, and we're going to make loans to everybody we can, and it's going to be good. So that's my story, and I'm sticking to it.
I love it. Some uplifting and prophetic words to take us home. And Rob, always enjoy talking about the business with you, bud. And thanks for joining me this week.
My pleasure, Rich. I appreciate it. It's good seeing you. I look forward to being able to do that face-to-face instead of over video.
Oh man, over a nice cold carbonated beverage. Yeah, I'm looking forward to getting back to more of that. And yeah, great seeing you as well. And to all our attendees, thank you as always for spending 30 minutes with us. We're here every Tuesday at 2 p.m. Eastern with the last week in Mortgage Today. Next week, Katie Klaus, the SVP Mortgage Operations for People's Mortgage out of Arizona. I'm sure she'll be giving me crap as well. Her Arizona Cardinals are off to a great start. And beat my Browns pretty soundly a couple weeks ago. But until next week, have a great rest of the week, everyone. And thanks again, Rob.
Thanks, Rich. Take care, guys.